Hey, welcome. Today, we're going to dig into a really fascinating framework that completely reimagines sports science through the lens of high finance. We're going to break down how the principles that run Wall Street might just be the ultimate playbook for winning on the field.
I know, it sounds a little crazy, right? But stick with me on this. What if the secret to building an absolutely unbeatable team wasn't just found in the gym or on the training pitch, but was actually hidden in the strategies used to build a billion-dollar investment portfolio?
And really, that's the big idea we're exploring today. The core concepts that make financial markets tick can be a surprisingly effective model for optimizing how humans perform. It's kind of like discovering a secret playbook for the modern coach and athlete. Okay, so let's dive right into this playbook. First up, we'll talk about investing in talent. Then we'll look at managing your athletes like they're prized assets. After that, we're going to find where the real competitive edge is hiding. And finally, we'll get into what truly separates the winners from the losers in a world just flooded with data. All right, section 1, investing early and smart. This is all about the foundations. Just like in finance, the decisions you make right at the start can have this huge, outsized impact on how everything turns out in the end. So the absolute cornerstone of all investing is this thing called the time value of money. It's actually a pretty simple idea. Money you have right now is way more valuable than that same amount in the future. Why? Because you can invest it and let it grow. Time is your best friend here. And get this, it translates perfectly to performance. A training session today is so much more valuable than that same session 6 weeks from now. The reason is something called compounding adaptation. Every single workout literally builds on the last one. That early, consistent work creates a physiological foundation that allows future gains to grow exponentially. It's like your fitness is earning compound interest. So the big takeaway here is really simple. Invest early and you'll get the biggest dividends. That preseason conditioning, the rehab we start on day 1 of an injury, or the skills you teach a young athlete, all of it compounds into a much, much greater return down the road. But of course, no investment is ever without risk. In the world of finance, if you want higher returns, you usually accept higher risk. Well, guess what? It's the exact same in performance. To get those big fitness gains, you have to apply some serious training stress. But the more you push, the closer you get to that red line, the injury line. And this perfectly illustrates the tightrope that coaches walk every single day. Every single decision. Add one more sprint, one more set in the weight room. It's a calculated risk. They're constantly managing a portfolio, balancing the potential for huge returns in fitness against the volatility of an athlete's health. This brings us perfectly to our next section, managing your assets. Because, hey, once you've made an investment, you've got to protect it. And in sports, your athletes, well, they are your most valuable assets, period. In business, there's a saying, cash flow is king. A company can look great on paper, be super profitable, but if it doesn't have the actual cash to pay its bills, it's going to fail. The parallel in sports is so powerful. Availability is king. You can have the most talented athlete on the planet, but if they're always injured, their talent is completely worthless to the team. Now, take a look at this number for a second. 40%. In the world of elite sports, what do you think that number possibly represents? That's the percentage of the season that some players considered elite are actually available to play. Just let that sink in. If a player is on the sidelines more often than they're on the field, they stop being an asset. They actually become a negative value asset, just taking up salary in a roster spot without contributing anything. So how do you protect your assets? Well, in finance, the answer is diversification. You don't put all your money into a single stock. That same logic applies directly to performance. Relying on just one training method or one magic recovery tool or one star coach, that just creates fragility. A diversified performance strategy is just way more robust. It means you're varying movement patterns in training to avoid those nagging overuse injuries. It means you're using a whole toolbox of recovery methods, not just relying on one. And it means building a staff with different complementary skills. You've got strength coaches, physios, psychologists, all looking at the athlete from different angles. Okay, so you're investing smart, you're managing your assets, but here's the thing. In elite sports, everyone is doing that. So where do you find that actual edge? Well, that brings us to section 3, and it's all about making smarter, smaller decisions. Economists call this marginal analysis. It's really just about asking one simple question. Is the benefit of doing one more of something worth the cost? In performance, this totally shifts the focus from more is always better to is this smarter? For example, does adding one more high-intensity drill really give us a performance boost? Or does it just add fatigue that's going to cost us on game day? And this really gets to the heart of it all. Elite performance isn't about who can do the most work. It's about who gets the biggest return from the smallest, smartest inputs. I mean, think about it. A simple 10-minute warm-up that reduces the risk of an ACL injury by 20%, that has a massive marginal return for a tiny, tiny cost. That's a winning formula right there. And that brings us to our final and honestly most critical section, the execution advantage. In this modern era, we are all just swimming in a sea of performance data. But, having data and actually using it effectively, well, those are two very, very different things. In finance, there's this concept called market efficiency. It basically means that all the known information is already baked into a stock's price, which makes it incredibly hard to find an informational edge. And sports has pretty much reached that same point. Almost every pro team has GPS trackers, force plates, wellness surveys. The technology itself just isn't a unique advantage anymore. So if everybody has the same information, where does the advantage come from? It has to come from somewhere else. It comes down to execution. It's found in the staff who can interpret that data better, who communicate seamlessly, who integrate all these principles in a totally unique way, and who create a culture where everyone, from the star player to the front office, completely buys in. And this is maybe the ultimate principle of this whole framework. Any new gadget or cool data point, it's going to be copied almost immediately. Your information edge is temporary, but your ability to execute, your culture, your communication, your systems, that is a durable advantage that is incredibly hard for your competitors to replicate. And all of this leaves us with one final, and I think, pretty provocative question. It is so easy to get caught up in the latest technology and all the numbers, but I want you to take a hard look at your own team or organization. Are you just collecting data? Or are you actively building a culture and a system that creates a true, lasting execution advantage? Because the answer to that question, well, that might just be the difference between winning and losing.